What's up, traders and investors? In this video we'll be talking about stock investing versus forex trading, and I personally have a love-hate relationship with both because I both made a lot of money and lost a lot of money at each. I've been investing for almost 3 years now, and forex, well, this is my second year knowing about it entirely, but it has only been a little over a year since I've actually been trading. So to make a long intro short, I'll be breaking down the pros and cons for both with the similarities and differences, then lastly stating which one of the two are preferred. Just to be clear, I am talking about stock investing and not stock trading. So now with that said, just remember to like, share, comment and subscribe if you're new, and returning family, enough love. For the persons who might still not know the difference between forex trading and stock investing, well, the foreign exchange, also known as forex or FX market, is a global decentralized marketplace for exchanging national currencies against one another. Because of the worldwide reach of trade, commerce and finance, the forex market tends to be the largest and most liquid asset market in the world, and traders make their money whether the market goes up or down. While a stock is an investment, when you purchase a company's stock, like say Coca-Cola, you're purchasing a small piece of that company. That small piece is called a share. Investors purchase stocks in companies they think will go up in value because they have done their fundamental analysis or proper valuation, or downright speculating, which is simply just guessing based on what they see trending in social media. Similarly to GameStop stock, if the company's stock increase, then the value of each share increase in value as well. The stock can then be sold, and then the investor would have obtained their profit. Alright, so for the pros and cons for the stock market. Pros: there is a lot of stocks to investing across the world that you can look up and invest in. On average, each country has about 400 public listed companies throughout the world. So there is a lot of options you can look up and see what they're doing, what their earnings are, and who their managers are. And in turn, you can make a decision if you want to actually invest or not in that company. The second tip is there is essentially less to look at, in my personal opinion, when it comes to investing. Personally, there is still a lot to look at, but outside business performance, the manager, and all the outside factors that might affect the market or affect that particular stock, we're talking competition, we're talking barriers to entries, etc. Outside of that, there isn't really much factors that could really influence the stock price compared to the vastness of the forex market, which is good. The less you have to focus on, the better you will be able to notice changes that can lead to winning or losing money in the stock market. The third thing is commission fees are heading to zero. Back in the days, they would cost you money, or cost you a lot of money, to buy and invest in stocks. Alright, however, as technology has gotten better, it costs less and less, and some brokers, like even Robinhood, have a zero commission fees for a transaction. And I can bet that there will be more and more brokerages which will charge less and less until the cost to do a transaction in the stock market will be zero. Alright, so all good things have bads in some way, shape or form, and a few cons that the stock market has. One, you have limited hours. The stock market opens at about 8:39 a.m. that's about London session, and closes around 4 p.m. or about 5 o'clock. If you're like average Joe, that would be a problem, because let's say you work a 9 to 5 and you reach work at 9 and you're back home by probably about 5-6 p.m. You would have missed out on all the action from the market that happened in that day. The second thing is the market does not have leverage. This just simply means that if you have $100, then it will only be $100 worth of stocks you can buy at that point in time. The third con is that stocks can go to zero, and then you would lose all your money, because if you have shares in a worthless company, then you have a part of something that is worthless, which is basically $0. And also, if a company gets delisted, which may probably breach some form of regulation, or they fall below standard for a particular market or such, they can get delisted off the market, and then you lose your money because, well, they're no longer on the stock market. The fourth con is the market is subjected to rising or falling prices and this happens in every market, but when it comes to the stock, well, it is a bit more aggressive. So if the whole economy is down, the stock market will more or less go down as well, and vice versa. And if your, say, president or government say something good about the economy, then the stock price will go up alongside with your investments. But if they say something bad, well, you know how that goes. Alright, so now that we are finished with the stock market pros and cons, let's go to probably where most of you guys probably know a bit more about, and this is the Forex market. And the first pro is that it's a 24/6 market. This is good because let's say you work in the day with Forex, you can come home from work, then sit around the desk, do your correct markups and take in your considerations and get your proper confirmations in order to take your trades, rather than having to be at work and do just a quick something on your phone because you know time is limited. Plus, as an added bonus, work finishes around on average for everybody about 5 to 8 p.m. and the Forex market starts to make the big moves around 12 to m. So you have a good amount of prep time before you actually need to do your trades. You can even take a nap if so be the case and just get back up and ready energized to attack the market. The second pro is that there's really just 8 major currencies that you can trade. And you know we have the metals and the oil and the indices and the grains, but outside of those there are really just 8 major currencies that we trade, and that is the USD, you have the Great Britain pound, you have the euro, you have Japanese yen, you have the Aussie, you have the New Zealand dollar, Canadian dollar, and you have the Swiss. Alright, so this is good personally because let's say you want to start trading. By having less things to look at, you'll be able to like focus on 1 or 2 and build the sauce factory right there and start printing money just like the banks. Alright, so the third pro is it has a ton of liquidity and low trading fees. This means that let's say you take up a barrel of water. 1 drop of that water would be the stock market and the rest would be Forex market. The stock market exchange is somewhere about $500 billion per day compared to the Forex market, which is somewhere close on the upward side of $68 trillion. So what this means for us as small retail trader is that we can get in and get out relatively easy. Alright, so the cons for Forex trading, because as I say, nothing is perfect in the investing side. Matter of fact, nothing is perfect regardless. For new traders, there is a lot of leverage, which is bad if you don't know what you are doing, because you can do more harm than you can do good. This is like giving fire to a baby. They will burn themselves. The second thing is, there is gurus in Forex, and I need not say more. These are persons who fake that they are doing it but are not, and their aim is not to make you make money but to actually convince you to take money out of your pocket. I have had my fair share of them, and if you don't know, well, check out my video on how I got scammed. But yeah, the third con is that Forex honestly has a little learning curve. Unlike stock, where you can know nothing about the market and how to analyze the stock market and simply just invest in a company that you believe in and leave it. And if the company is good and performs well over time, your investment will grow. But for the Forex, your aim is to consistently make profits, and you actively have to be on the charts each day in order to get an entry that you can possibly win. The fourth con is Forex for retail trader is a lot less regulated, which means that there are a lot of scams out there and there's a lot of things that haven't been fully developed as yet. And this is why you might see that most countries don't directly allow it, and this is simply because Forex trading for retailers is relatively new. It's no more than about 20 years for the retail traders. So yeah, and to answer the question on which one I personally prefer, I will have to say both, because with Forex I can actively trade and aim to make more profit while having the stocks and my investments in the back burner passively increasing over time. So then I would have 2 streams of income, and honestly I started off with stocks first to get the feeling of investing and risk and the whole works. Then I found out about Forex not too long ago, honestly. So take this information with a grain of salt. Remember, I am not a financial advisor. And with that said, love you guys and see you in the next video.